We've reached the end of 2024. It's been an excellent year for the stock market, for investors, and for me personally, for this channel. So I really do appreciate all the support and love that you have shown me throughout this year and actually throughout the last couple of years. So thank you very much. 2025 is probably going to be the year where the channel will hit 100,000 subscribers. So if you're new here, you can already help me out a little bit by hitting that subscribe button. So in this video, as with every other monthly video, we're going to talk about 4 companies for a specific month. In this case, for the first month of 2025, which is January. Now, I'm not here to waste your time, so the names will pop up. I do hope you keep watching, and if not, at least hit the like button. Thank you very much. Now, of course, these are just 4 stocks. We've previously talked about 10 other stocks for 2025, undervalued stocks, under the radar stocks, etc. But I don't want to speak only about those 4 companies. Throughout the year, we have talked about, well, I think close to 100 companies overall. So maybe in 2025, we can beat that number. Anyways, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So we start with company number 1, and this is not a ranking list, this is just a list. I'll start with company number 1 here, that is Mercadolibre. Now, Mercadolibre has a market cap of $86.78 billion, currently a forward PE of 46.3 times. Of course, you might say, oh, this is extremely high, but forward PE right now for this company is not really the metric that I want to focus on and say, oh, this is a buy or this is a sell. Plus, if you look at the growth rate for EPS, it's growing closer to 35-36% in fiscal 25 and fiscal 2026. So growing the bottom line quite rapidly and the top line above 20% as well. Now, year to date, the stock has underperformed, especially in the last couple of weeks. Stock is up only 8.9%. We can also see that in the last 3 months, the stock is down 17%. We did a specific video talking about Mercadolibre and new holdings, a little bit about the local as well, and the situation in Brazil, and especially in Latin America. If you missed that, that's going to be in the top right corner. At the time of making this video, the average analyst price target sits 35% higher than the price we're at today. Looking at some pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, they're all lower than the 5-year mean, and then price earnings to growth for the next 12 months here sits at 1.55. We've seen the growth rates for revenue, but what about free cash flow? For free cash flow for fiscal 24 is expected to grow by 17.8%, but in fiscal 25, that's actually expected to drop by 54% or so. We've known from last quarter that the company is now investing more in the business, so margins do get hit, so free cash flow gets hit as well. Plus, you might say that some headwinds from Brazil might affect the company negatively. I think I would agree a little bit. But then in fiscal 2026, free cash was expected to grow by 80.2%. Now, why is Brazil such a big deal? Well, because if we look at revenue, we can see that revenue from Brazil is the biggest chunk here. Last quarter, $2.91 billion. Argentina is actually picking up the pace, although it did lose the number 2 spot to Mexico. I think it will regain it as the Argentinian economy becomes better and better, and that might actually be a tailwind for the company. Now, as you can see, this is since, well, December of 2019. You can see that the company continues to grow quite rapidly. And the issue with geopolitics in the regions there did not start last quarter, right? It started way before that, and Mercadolibre is a company that has been around for a long time, has been through different presidents, different geopolitical turmoil in the area that didn't stop the company from growing top and bottom lines. We can split their revenue into 2 parts, commerce revenue and fintech revenue. In the past 4.5 years, commerce revenue increased by 706%, while fintech revenue increased by 662%. Looking at a GMV in that same period of time, that has increased by 233.4%. Number of successful items sold is up 316%, and numbers of items shipped is up 389.2%. What's also important to note is that if we look at the LATAM e-commerce sales by company, we can see that Mercadolibre alone has 34% of LATAM e-commerce sales. If we go specifically to Brazil, we can see that they are at 42%. So an extremely strong company in that region. And for those of you that have been following me for quite a long time, you probably already know this is a top 5 position for me, and I do intend to increase it if we see some further weakness in the stock. Moving on to company number 2, and that's a company, well, we have to go to another continent, and that's Grab. So Grab right now is at a market cap of just under $19 billion, a forward P of 157.2 times, but here again, we don't have to focus on forward PE at the moment since there was no E previously, so it's pretty fresh. Now, we can see that the stock is up close to 40% year to date, with the big, let's say, rise happened in the last 3 months or so. But in the last month, since the peak, I think it was at $5.60 or so, the stock has seen some weakness. Now, if we look at what the analysts are expecting this company to do, top line growth quite solid, right? For fiscal 25, 20.7% and then 15.18% in fiscal 2026, but EPS growing more than 128.3% year over year from fiscal 25 to fiscal 2026. Looking at the average analyst price target, that sits 17.15% higher than the price we're at today. And then some pricing metrics. Unfortunately, we don't really have that much to work with, so there's no 5-year mean or stuff like that, but it is lower than, in some cases, the 6-month mean and the 2 to 3-year mean. Looking at free cash flow growth for fiscal 2024, free cash flow is expected to be up over 3,000%. Then in fiscal 2025, it's supposed to be up close to 25%, and then another 10.8% in fiscal 2026. If we look at how they generate revenue through delivery revenue, mobility, and financial services. Financial services is still a small segment, but that's one that's been growing quite quickly since the March quarter of 2023. Deliveries revenue is up close to 30% since then, and mobility revenue close to 40%. Looking at total monthly transacting users since the June quarter of 2020, that's up 117%. Now, here we can do a split between on-demand gross GMV post-fiscal year 2023 and pre-fiscal year 2024. They changed the reporting, so this is basically the rise that you get. Pretty solid growth overall. The difference here, right, in the 2023 quarters, the small difference here between the orange and the green bars is because of a small difference in deliveries reporting. But all in all, very, very solid growth in the last couple of years. Now with Grab, of course, we are operating in Asia, more specifically in Southeast Asia, those regions there. I mean, you might think that, okay, small markets, but no, the population there is quite big. Monetization-wise, it's true, it's not as monetizable as Europe or North America, but you have plenty of people to monetize. Plus, as we've seen in previous Grab videos, so if you missed that, go check them out. We dived a little bit deeper. This is a one-stop shop. This is a one app, a super app, something that we don't really have in the West, but something that works pretty well there in Asia. If you've been to Thailand or those regions, you've probably already used a Grab. And to be honest, the more we go into the future, the more people will get attached to these types of services, especially in those regions, which means you can start cross-selling, right? If you can do everything in one app, you can open up more and more possibilities to monetize one specific person. Of course, like I said, the ARPU, for example, average revenue per user is not going to be as high as a user for, I don't know, Uber, for example, in Europe or in the United States. But it's good enough for there since you've got, well, billions of people. Now, Uber, by the way, does have a stake in the company. Uber previously competed with Grab, then they decided to sell the Uber Southeast Asia business to Grab. They got 27% or so stake in Grab. Now it's down to around 14% or so. So if you own Uber, you own a small stake in Grab. Moving on to company number 3, and I don't know why this has become a controversial pick, maybe because of the nickname that it got, and that's Advanced Money Destroyer, AMD, Advanced Micro Devices. The stock is down 18% year to date after being up over 40% at the start of the year. This is a company that I've started to cover way more in the last couple of weeks. I've been covering AMD for years now. But more recently, I started to cover more and more because, well, the stock has started to come down quite quickly, right? Over 26% in the last 3 months. Market cap under $200 billion right now, a forward P of 26.8 times. You will see that the PEG ratio is under 1 as well. The company is expected to grow quite rapidly in the next coming year. So yeah, it is becoming extremely attractive. If we look at the average analyst price target, that sits 52% higher than the price we're at today. Then looking at some pricing metrics, of course, forward PE, EV to EBITDA, price to sales are below the 5-year mean. Price to free cash flow is higher than the 5-year mean. That's because, well, there was a period where free cash flow was basically thrown out the window, but the bottom line is increasing extremely rapidly, as I've shown you in previous videos. And here you can see price earnings to growth, 0.64, very, very cheap. And here we can see that free cash flow is expected to be up 228.9% in fiscal 24, another 90.3% in fiscal 25, then another 33% to reach $9.3 billion in fiscal 2026. Now you might say, okay, that's great. So why is the stock getting hit, right? Why is the stock getting hit despite generating over $11 billion in data center revenue in the last 12 months, right? And of course, a big part of the operating income comes from that segment as well, right? So why? They kept raising the bar when it comes to AI revenue. Well, that's exactly what I want to touch on right now. This year, it's true, they started the year with what? $2.53 billion in AI revenue, and now they're expecting to exceed $5 billion, which is great, right? But this trick will not work in 2025. Right now, the market analysts, we've covered that in previous videos as well, they're waiting to hear about guidance for 2025. The number is closer to $10 billion, right? So basically more than double, close to double year over year. If AMD thinks that they can play the same game as in 2024, where they start the year with, I don't know, let's say $7.5 billion, I don't think that's going to be enough and well received by the market, because they know, okay, they're lowering the bar again so that they can exceed it and we're going to be, wow, congratulations. No, I think the market wants them to come out already with a pretty strong number at the start of the year and then exceed that number along the way. I think that's just my prediction. That's also why I think the stock has been under pressure. Plus the software side of the business really needs to improve if they really want to compete with NVIDIA and NVIDIA CUDA. That's just my opinion, but I do think that with the recent drop in price, I think it deserves to be on the list. Yes, I know I've repeated that again and again, but if the stock continues to go down, why not repeat it again and again? Because it's still a good opportunity. Moving on to company number 3, and that's a company we've covered more recently because the stock crashed, well, 20%. And that's Novo Nordisk. Now, Novo Nordisk year to date is now down 16.3%, has a market cap of $385.5 billion and a forward P of 23.7 times, also pays a dividend, has a dividend yield of 1.2%. If you look at what the market is expecting this company to do, right, in the next coming fiscal years, top line growth close to 20%, bottom line growth above 20%. Now, the recent drop here was, in my opinion, an overreaction. Yes, it's true that they set their goals at a 25 reduction for their trial of the weight loss product, came in at what, 22.7 if I remember correctly, or 22.3. So yes, it is lower than the target, but still quite good. And despite a small drop in average analyst price target, we are still sitting 46% higher than the price we're at today. Looking at some pricing metrics, forward PE, EV to EBITDA, price to sales are all lower than the 5-year mean. Price to free cash flow is a little bit higher at 35.5 times, but that's in the last 12 months. If we look at price earnings to growth, 1.23. Under 1 is usually by definition undervalued, so 1.23 is not that expensive. So yeah, I would still categorize it as cheap. Looking at free cash flow growth, we can see that in fiscal 24, free cash flow is expected to take a hit year over year. but then increased by 38.4% in fiscal 25, and then another 27% or so growth in fiscal 2026. Novo Nordisk generates the majority of its revenue from the United States, then Europe, Middle East, Asia, rest of the world, and China. But in China, I do expect it to become a little bit bigger throughout the next couple of years. And here it comes at no surprise that the majority of the revenue is generated because of Ozempic. Now, as we've said previously, it's okay if you want to go with Eli Lilly, that's also a top pick. I just thought that the reaction of the market to drop this stock by 20% or so was an overreaction. So now you're getting a very good company at a cheaper price just because, yes, the result missed their own target by 2.7 percentage points or so. So overall, those are the 4 names I wanted to cover that I think are quite interesting, especially for the month of January. Like I said, 2025 is going to be another great year here on the channel. We're going to try and cover even more companies if that's even possible. So thank you very much. Happy New Year's, and I see you all next year or tomorrow. Anyways, thank you. See you in the next video. Bye-bye.